Hey everybody, it's Mark Yegge. Welcome back to another weekly stock market update. What a week. It's been, I don't know, kind of crazy. We've been going through this head fakey thing for a couple of weeks. Market doesn't really know which way it wants to go. It's listening to Powell on one hand, and it's listening to the economy on the other hand. It's trying to figure out which way it wants to go. Interest rates are at, multi-year highs, and that's bad for the real estate market. But the real estate market seems to be shrugging it off. There's like mixed messages, and it's really made for a very uncertain September. Right now, we're red. I'm going to show you the chart here, and I'll show you why we are red. But here we are, red. And let me get my other screen going so I can see what we're doing. Okay, good. So here we are, red. You can see there's 4 red lights. So the market went green last week when we started talking about all this stuff. And right immediately after it went green, it just started being uncertain and having a little bit of a downtrend. And yesterday it had a big downtrend. And let's take a look at the indexes. The indexes are now all below their 50-day moving average. I would say not a lot of good things happen when things are below their 50-day moving average. And we've had pretty much the whole year where things have been above the 50-day. Well, now they're kind of living below the 50-day. We'll see if it keeps going. The S&P 500 below the 50 with a gap down yesterday morning. Gap downs are not good. I suspect it wants to take out that 43.35.31 swing point from a few days ago, from a few weeks ago, I should say. And if it does that, this market's heading down to the 200-day moving average, which right now is around the, $4,200 level, something like that. So there's a little bit of room to the downside. On the other side, it's got that gap down from yesterday, probably wants to fill that gap at some point, but it might not be for a while because the momentum now seems to be the downside. This chart is even worse. This is the Dow Jones Industrial Average. It's way below its 50. It's really close to the 200. Probably going to go test that. It's certainly testing the 34.029 swing point right now, and it's gone below it. It's kind of saved it and gone above it now. But there's a little pattern called the dreaded H on this chart, which portends lower. Okay. The New York Stock Exchange, same thing. This one actually did go to the 200-day moving average, which is why I feel that everything else wants to go to the 200-day moving average. It bounced off it yesterday, today, actually. But, I don't know. I don't know, guys. Like, I don't know what this is about. The Fed is talking about keeping interest rates higher for longer. They were a little hawkish yesterday. I hate to be a short-term noise person because none of the stuff they say over time really matters because they don't know what they're doing anyway. And economists don't know what they're doing and analysts don't know. And the only person that knows is you. And it's because you're studying this stuff. You're watching things like this market update and hopefully you're learning. But, you can get a bunch of people on CNBC and all they do is they contradict each other. And they're all smart people from Yale and Harvard and MIT. But they're just, trying to get on CNBC so CNBC can sell ads. So you really got to trust yourself. You know what I always say, never give up your power and your health, your wealth, or your time. These are the times that I really believe in that, because if you start listening to everybody, you're going to not know which direction to go into. So there's 4 market indexes that are looking really mixed to down right now. I don't like any of them. And here's the volatility index. This is what I call the panic indicator. And you can see the panic indicator now is spiked up this week. It's gone up 5 days in a row. And then today it's down a little bit because the markets are slightly up. So it's there's a spike up going on there. And look at how low it was last week. And things were really calm. And now there's a little bit of uncertainty in the market. You could see it in the volatility index. And this is something that I always look at. That's the transportations index. Generally, what this does is it leads the Dow down. This is how companies are moving goods around the world, around the United States. Transportation has been on a decline. You could see from that chart right there. And if transportation's on a decline, that means people aren't buying stuff. They're not moving things. Now, the market does look at things out 12 to 18 months. So maybe that's telling us that 2024 may be a rough year, not just in the market, but in the economy. That's probably what it's telling us. And here's why. I mentioned this last week and maybe even the week before. I'm a little concerned about this chart right here. This is the airline index. Why is the airline index gone from 80 down to 55? Like, that's a significant decline in a short period of time. So it went up that quickly, and now it's down even lower than where it began, that last little run. Why? Are people traveling less? Not on the airplanes I'm on. I think they're looking out a year going, you know what? We're not going to be able to travel maybe in a year, or we're not going to be able to afford to travel, or the economy's kind of clamming up. Who knows what it is? Anyway, just wanted to bring all that stuff to your attention. I hope you have a fantastic weekend. And listen, I'll see you next week on another edition of the Weekly Stock Market Update. Take care.